Hi guys, you are welcome to our channel once again. In today's video, we are going to look at expenses owing and prepaid, or expenses accrued and prepaid. So from accounting perspective, when expenses are owing or when they are prepaid, what are the accounting treatments? What is the meaning and what are the implications? So before we look at that, let's try to look at the meaning of expenses prepaid and owings. Now, expenses owing or accrued. So these two terms are the same. When you say that expenses are accrued or they are owings, it means the same thing. When expenses are accrued, it means that those expenses have been incurred, but they have not paid for them. So we say that the expenses that have been incurred, but not yet paid for. So we are using an example like rent accrued or electricity accrued or rent owings, electricity owings. So let's take for instance, you are renting a particular building for your business activities, which can be your office, it can be a warehouse for the entity. So if you have utilized that premises for, let's say, a month or a year without you paying the landlord, then we say that it is rent accrued or rent owings. You have incurred the rent. You have enjoyed the benefits of using the facility, but you have not paid for whatever that you have enjoyed. In that case, we say that it is rent owings or rent accrued. It can also be electricity. So in this case, you have enjoyed electricity, but you have not paid for the electricity that you have enjoyed. You see, there was electricity owings or electricity accrued. It can even be salaries. Your workers may have worked for you, but you have not paid them their salary. So you can be owing, let's say, salary for about 3 months or 4 months or a month. So they are all owing. So all expenses that you have incurred, but you have not paid for, we term that expenses as what? Owings or expenses accrued. Now, when such a thing happen, in accounting wise, those items are referred to as liabilities because you have enjoyed the benefits, right? But you are yet to pay for it. And so it's a liability to you. It is not a gain, but rather was a liability because you are yet to pay for what you have enjoyed. And so there's going to be a future cash flow from the entity. And so once that activity is going to result in a future cash outflow from the entity, then it's qualified to be a liability. So if you have an expense owings, they are classified as what? Liabilities. They are not income, they are not assets, they are not equity, but they are what? Liabilities. Now, this classification is very necessary because when you have a lot of information about an expense, the expense has some owings, they have made some payment and all of that. If you don't really know the classification, it will be difficult for you to determine the actual amount of rent that will be taken to the P&L accounts. So this classification is very, very important, and you have to keep it in memory that expenses accrued or owings are liabilities. Now let's look at expenses prepaid, which is the opposite of the owings. Expenses prepaid, we say the expenses that have been paid in advance, but the benefit is yet to be enjoyed. So in this case, you have paid for your rent, but you have not really utilized the facility. So let's say in most countries, you pay for your rent in advance. So your landlord will ask you to pay, let's say, a year rent. Like in my country, Ghana, we usually pay our rent in advance. Your landlord will ask you to pay for, they can even take as high as 2 years advance. So you pay the money for the next 2 years, then you begin to enjoy it right from there. So in that case, it becomes expenses prepaid. You have paid for your next year rents, but you have not really enjoyed the rents. Or you have paid for your next 2 years rents, but you have not really enjoyed the rents. So when that happens, we call it expenses prepaid. Or in this example, it becomes what? Rents prepaid. Now, rent prepaid, as we said, as one of the expenses prepaid, you can also have electricity prepaid. In my country, Ghana, the electricity is usually prepaid. You pay for the electricity before you begin to enjoy. Previously, you have to enjoy the electricity for a whole month. When the month ends, then the government comes to take the money. But now, you pay for the electricity. After paying, then they give you the access to enjoy it afterwards. So in this case, it becomes electricity prepaid because you pay for it before you begin to enjoy the benefits. So all expenses that you have really paid for, but you are yet to enjoy the benefits, in accounting we term it as expenses prepaid. Now, expenses prepaid, as we said earlier, is the direct opposite of the expenses owings. The prepaid are classified as assets. They are assets because you have enjoyed, you have not yet enjoyed the benefits, right? But you have paid for it. You have not enjoyed the benefits, but you have paid for it. So in this case, if the landlord is not able to make conditions right in the house, or if the landlord says you are no more going to occupy the house, then you have the right to take your money. So for expenses prepaid, it is classified as a liability because this will not result in future cash outflow, but it's payment you have made, but you are going to enjoy the benefit subsequently. So expenses prepaid are classified as assets. So as I said earlier, you need this classification so that you can prepare a complete expense account, which will be the focus in our next video. So this video is basically to make you understand the expenses category, prepaid and owings, whether they are assets or liabilities. Because once you get to know that they are assets and liabilities, then you know where to position them in the expense account for you to be able to determine the actual amount of expense that will be taken to the profit or loss account. So this is the end of the video. If you have not subscribed to our channel, make sure you do for you to have access to such videos. So stay tuned. In our next video, we are going to combine the prepaid and then the owings together in one account, because in most cases you are going to have a lot of information on, let's say, rents. You have rent prepaid, you have rents owings, right? And you also have rent that has been paid for that particular month. So in that case, which of them are you taking to the P and L accounts? And you have a way of preparing that account. And that is the focus of our next video. So let's look at our next video and then see how we can prepare this account. Thank you for subscribing.